Hey everybody, Boris with BK Force. Welcome to the weekly technicals for the majors for Euro dollar, dollar yen, and pound dollar for October 16th to October 20th, 2017. Treading water, man. This week, like the week before it and the week coming up, looks to be very low volatility week. I'll show you on the charts just how compressed everything has been this month of October. And we don't really have a lot on the calendar to break us out of these ranges, but we'll be looking at some key ideas as we take a look at the charts. Before that, though, let's take a look at the levels and see how the levels have moved since the week prior. So Euro still remains in the 17 to 19 corridor, very much contained, and really looking actually weaker than all the rest of the majors. The flip back from being rejected off the 19 looks very ominous to me, and I'll show you on the charts why it looks very distributive on the Euro dollar. Dollar yen also looks quite bad. Seems to have failed third, fourth, fifth time around the 113 level. For now, support is 111, and that's a really, really key support. If that does not hold, it looks very bad for dollar yen. But it's really ironic, actually, because the market sort of is absorbing all this positive U.S. data and still continues to sell because U.S. yields continue to not believe the positive U.S. data. So we'll examine that a little bit more closely when we take a look at the data. And cable actually was the surprise winner of last week and continues to look relatively good. Now, this is interesting because of the incredible confusion and chaos that's going on about Brexit and literally the movements of 100 pips one way or the other way off the headlines. But we are facing probably the most economic risk, the most dense calendar in UK this week. So we'll be watching that very carefully to see if we can find some entry points there. That looks actually the strongest as we enter the week. Let's take a look at the calendar first before we get to the charts. So the calendar on the major side is really all UK. There's nothing else of any import here from Europe or from US. On the UK side, the critical thing here is the CPI data. And as you can see, we are bullish the CPI data. We think the CPI data is going to be hotter, which is obviously very positive for cable because the hotter CPI data almost forces the BOE to raise rates. There's very little choice they have given the fact that they're going to be running almost 3% data. Now, the next piece of data that's kind of very important, which actually makes us bearish, and this is where it gets very kind of very interesting with cable, because I think you could have a two-way move here, up and down, is the fact that the claimant count data is actually going to slow down. One of the things that's happening that's fascinating in the UK economy is that you have, in some ways, the worst of both worlds, hot CPI with a slowing down growth. And it's going to be interesting to see because we also have Carney talking this week how well the BOE is going to respond to this, whether they're going to pay more attention to the inflationary numbers or whether they're going to be concerned about growth as they go forward. So cable very much open to massive amount of volatility one way or the other. As far as everything else goes, we don't have, well, we have retail sales, which is the final sort of piece of data set from UK, and we're actually relatively bullish on that. So I guess net, you still have to look at cable and have a strong belief that it's a buy to dip story. And I'll show you exactly why on the charts as well. Aside from that, nothing on the US side of literally any import. I mean, Philly Fed, existing home sales, you could sleep through these events and not have any impact on the currency. And we just really gonna have to see how well US yields are trading into the week to see if the dollar has any hope or any shape of bouncing this week. Let's take a look at the charts here and see what's going on. So one of the more interesting things, I think, when we first started with the euro is just how ugly the ending was this week. I mean, look at this. We ended up on the lows, huge rejection of the 119s. Yes, we're still very much in this sort of very, very slow motion car wreck in a way, as the range is very, very tight. But one thing that's becoming very clear, since August, you're basically looking at a massive distributive top, right? We sort of ran into the 120, and that's the wall that we are facing right now. And to me, euro essentially is a sell the rally unless we can take out 119 and close above 119. This chart does not become bullish until and unless we get a close above 119 on a daily basis. If that happens, then all of this kind of distribution looks more like support, and it completely changes the picture, and we look like we're going to run back up to 120s, 121s. But given the fact that we failed at the 119s, given the fact that we're now ending the week on the lows, and the preponderance of flows here seems to be to the downside, the much higher probability is that we're actually going to, oops, let me see if I can use my newfound toys that I found here. The much higher probability here is that I think we're going to end up down on the euro. I think we're going down to at least 117, possibly the 1650 support. This whole big distribution here is just starting to really weigh on the pair technically. And you need some kind of a change of sentiment. One of the things that I think that's sort of interesting that's happening is even though the ECB is talking about tapering, they're talking about it in such a gradual way. The market may be running ahead of them or may have run ahead of them. And that, in fact, is what's creating the frustration of the market, which is what's creating the whole selling flow that you're seeing in the euro. It's not necessarily that anything bad in the European economy. It's just simply, I think the market ran ahead of itself and now may be trying to correct all the way down to the 117s. Dollar yen, also pretty ugly story. Not only is the story in dollar yen quite ugly because obviously you see this whole failure. Oops, let me see if I can get this again. I gotta, my new toy. I gotta get used to it. You see this whole failure around the 113. 1, 2, 3, 4, 5, 6, 7 days we couldn't hold the 13s. That's a very ominous sign. But more importantly, notice that this is a failure at a lower high than this one. So now we really need to close above 113 to recapture any kind of positive momentum in the dollar. And the fact that we broke the 12s and we ended up pretty much on the lows here suggests that certainly we're going to try and test the 111s here as the week goes by, especially since we don't really have any kind of positive U.S. events to drive us. It's all going to be driven by equity market flows, which could have a risk-off sell-off, or bond market yields, which could continue to compress. So really feels to me like 111 is just calling on dollar yen at this point. But a break of this 111, that's a very, very big support level, really puts us into a much more negative territory and really puts the 110 into play. So be watching that very carefully as well, because to me, both euro and yen look kind of ugly, which obviously creates a euro-yen short in many ways. Euro-yen really faked a lot of people out this week, so I think it probably continues to be a very interesting short because it caught a lot of people who were fake long in it. And finally, here's cable. So cable clearly made a very nice V-shaped bottom. The one thing that bothers me is that we kind of failed to hold the 133s here. And a lot of it is just contingent, I think, on just the chaos that is in Theresa May's cabinet right now. But as the focus shifts much more towards the economics and towards the more monetary policy, in other words, while the political negotiations are kind of put away for at least the time being, since they haven't really arrived at any kind of a meaningful deal, the focus now comes back to monetary policy. And monetary policy is going to be very, very much tested by the data this week. If the data comes in as we expect, hot CPI, relatively decent retail sales, and perhaps not as bad employment data, it almost really beckons this move towards the 134s, and that puts us straight up, back up towards this 134, 136 level from which we failed a couple of weeks ago. So V-shaped bottom, very powerful, working off of a higher low, and finally, and this is actually, let me get rid of all this because I want to really make it clear to you. Finally, what I think is really interesting here from a technical point of view, well, actually, let me focus in on this. This little candle, whenever we see a big doji candle, right, this big wick, these wicks tend to be very powerful signals of forward action. It's highly improbable that we're going to erase all of these, all of this buy-ups. This is basically the market telling you there was tremendous amount of value at these levels. That the bulls really bought it up. And usually when they do that, it tends to extend the move at least for 100, 150 pips higher. So to me, cable is a buy to dip story up all the way until 131. If it breaks 131, then yes, it's just this whole structure gets completely erased, and we're wrong. But I think we're going to be right here, and I think buying any kind of a dip here probably gives you any forward momentum as the week progresses. So that's how the week shapes up in the majors. I wish you guys the best of luck, the best of trading. Boris, over and out.